Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1132nd edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. Let me start off with a question. Am I not the worst analyst on this planet? Do I not suck this week? Why are you people watching these videos? I can't even imagine why you'd be here.
Get off the stage, man.
I know.
Yeah. I don't even know why you're doing this. Get out of here, man. Get out.
I get it. If you don't shut up, I'll belt out another losing trade tomorrow. All right, let's see what we can do about Thursday night for Friday. Traders, the volatility has gone through the roof. On Thursday, the OMNI sells S&P and Nasdaq. It gets stopped out right at the high tick of the day, and then the market plummets into the profit zone. We get stopped out at the high tick. Day before yesterday, the market goes down. We get long. We get stopped out at the low tick before it goes the other way. The volatility has gotten to the point it is just too uncomfortable. We got hit on a 40-point stop in Nasdaq yesterday, and if we had a 41-point stop, we wouldn't have been hit. That's impossible. Those stops are too big. The volatility has gone wild in the U.S. indices. Traders, as you know, futures trading can be extremely risky and cause substantial financial loss. Futures trading is not suitable for all trading accounts. Always trade with stops, even though sometimes you make history like we did today with the high tick in S&P and Nasdaq. That belonged to us Omniacs, getting out at the highs. What do you think? Buying them, not selling them. Yuck, that was ugly. All right, let's just move forward. What are we doing for Thursday night for Friday? The volatility has gone wild. It has gotten to the point that you really don't know where to place stops anymore because they seek and destroy them, and then it goes the other way, and they seek and destroy those stops, and then it goes the other way. Lots of volatility, right? Which side of the technical argument do you want to be on? At this point, are you still a bull, or have you become a bear, or are you in the middle? I have an argument that tells me I cannot tell you to buy the S&P on Friday. Listen, I did that video last night to show you there was a bunch of bear flags that formed in the U.S. indices and in the DAX. Today we had an extremely volatile session, but it did nothing to alleviate the flags. We are still dead center in all the bear flags. That's the bearish argument. The bullish argument is this. We're in a big booming bull market. It had come off for a few days, 5 or 6 days. That's a setback. Are you on the bull side or the bear side? I have to respect the bear flags. I have no choice but to respect the bear flags in the U.S. indices until we get out of them. The bear flags, if you don't know what they look like, a bear flag basically is a market that traded down very quickly and then spent a little time going sideways to up just a little bit. That usually presents or makes a big down move take place when the flag is done. We are right inside of a flag right now. It rallied up, it stopped us out, it rallied down. It would have been profitable, but it wasn't for us. And it's still inside the flag. That's S&P, Nasdaq, Russell, DAX, Dow, you name it. It's all of them. So, what side of the argument do you want to be on? Are you on the bear flag side, or are you on the it's a big bull market, we should be long side? I've got some great charts to show you why on Friday we are going to go slightly neutral. Let the markets tell us if those bear flags are going to work or not, because I must admit, I've got a very strong omni towards the upside, but lots of bear flags telling me it won't go. So, I'll show you the charts. Now, next, gold and silver look ready to dump. Traders, you got to see this. Gold and silver look ready to dump. With no further ado, let's go look at some charts. OmniCamp literally is the place where I hold back on nothing. I teach you the techniques I've ever learned. I teach you all the great tips and tricks the floor traders taught me in my 32 years coming up. OmniCamp is your chance to come to Las Vegas and study with me, Oscar Carboni, for 4 straight days. And I want to make sure you leave with the knowledge and confidence that you can carry out these techniques yourself. If you feel ready, if you feel like you can come on down to Vegas and study with me for 4 days, come on down to livewithoscar.com and simply click the OmniCamp banner and fill out the application. Okay, traders, E-mini S&P daily bar chart. What side of the technical argument do you want to be on? Bear flag, undoubtedly. I don't care what anyone says. That's what a bear flag looks like. All the S&P did today was gyrate inside of the flag. It never got out of it. Now, that's the bearish argument. Bullish argument. Here's OTAMA. We came right to it. Do you think we're going to hold? Are we in a big booming bull market that will hold Omni Trading Academy's proprietary moving average? I'm not sure. Is this a shoulder? Is this the head? And is this a shoulder building? I would say it's starting to certainly look that way, undoubtedly, with a bear flag in the right shoulder, but that shoulder is not mature enough yet. Let's continue to look. Traders, there's more. You know, this argument goes both ways here. The Nasdaq, a bear flag in the right shoulder. We are still in that bear flag. I don't care if we had an up day on Thursday. It did not get us out of the bear flag. And these flags have worked so well since I've been showing you these videos that just because it went up today and stopped us out at the high tick right here, it doesn't mean it's not still a valid bear flag. Until this flag either gets it's unvalidated if we go up or validated if we go down. Until something happens, traders, you do not know which way this will go. But it's a bear flag, and undoubtedly this is a head and shoulders, a small one, in the Nasdaq. Now, in a big booming bull market, a small head and shoulders generally is nothing more than a continuation pattern, just like this one. Shoulder, head, shoulder, continued higher. Shoulder, head, shoulder, it probably will continue higher, but there is the bear flag. We have had 6 down days now, or at least about 6 days of not going up. So you got to respect this before we start buying it again. This has to prove itself. Let's take a look at another chart. There's plenty here. The E-mini Russell. This has a bit of an F flag, or a bear flag, if you will. Shoulder, head, is that a right shoulder building? Will we hold OTAMA? What side of the argument do you want to be on here? It's not going to be an easy call Friday, so we're going to sit it out for a while. Then there's the Dow Jones Industrial Average. I've been showing you this chart for quite some time. This channel has worked really, really well. Then we got above it, tested it and held, ran up, came back down. We're under it about just as far as the last test, which did hold. But this time it's a bear flag. There's the pole, here's the flag. It's actually an F flag. Will it hold? What side of the argument do you want to be on? I think this is very dangerous with volatility going like this, taking out stops here, taking out stops there, and settling in the middle. Very, very dangerous. So, you know, I think we'll go play with the metals tomorrow. We'll see what happens. Then we've got the metals. Look at this, traders. Take a look at this chart. This is the daily bar chart for gold. Look at this perfect channel. Every time you hit it, holds and bounces here, 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 here. Held, held, held. We just hit it, went through it for 1 day, came back down. We're here. Gold looks like it wants to go lower on the daily. Then you go and expand it. Let's go out and take a look at the longer term. Look at the gold on the weekly here, traders. Look at this tremendous chart. Gold weekly bar chart. Weeks and weeks we've been inside of this channel, right? Look at every time it gets up here. What does it do? It holds. Hits here, holds. Hits, holds. Hits, holds. Then we break the 200 bar moving average. It is the only time you get out of this channel. It does a whoom, swoops down after breaking the average, back into the channel. Holds here, comes back down, holds here, goes up and holds here, comes back down and holds here, goes up and hits right there. What do you think should come next? I mean, that looks like a giveaway trade, right? Here's how it seems to work. Up, down, up, down, up, down. Well, big swoon because of breaking the 200 bar. Up, down, up, down, up. What do you think comes next, traders? I'm drawing a down arrow. I don't know. Call me crazy. So that's the gold on the weekly. And then we got something to back it up with. Look at this silver chart, traders. This is tonight's masterpiece. I love this chart. I've been showing it to my traders for months on end in my chat room at livewithoscar.com. If you'd like to see this sort of action, come on down to livewithoscar.com and come to my free chat room. Cost you nothing, and hopefully we'll teach you some good technical analysis. All right, so this is a bear flag, market breaks. Makes another bear flag, market breaks. Another bear flag, market breaks. A pennant bear flag, market breaks. Another bear flag, market breaks. Into a bear flag, this one doesn't work. rallies up, bear flag, and if you want to look at it, a wacky head and shoulders. Market breaks into what we have now, a bear flag, and we are right at the bottom of the bear flag now. 1, 2, 3, 4, 5, 6, 7, 8 bear flags. One didn't work. One's in question. Looks like it's going to work. You want to see more? Draw one here. Oh, another bear flag here. They're all over this chart. They have worked almost every time one was created. That's your silver. On the weekly, you've seen the gold. Metals certainly look like they could take it on the chin. Do your own analysis. Pull your own charts. Never take anyone's technical opinion unless you've done your own homework. Traders, you've seen the charts, and there is my technical argument for why the volatility is so grand. It's really difficult to get in that market right now and put a stop where it won't get tagged. Remember, we got tagged at the absolute high tick of the day on Thursday in both S&P and Nasdaq, and they were both winning trades before the day was over. And the stops were enormous. So at what point do you call a trade a gamble when the stop gets so much larger than the reward you were hoping for? You got to call it a gamble at a certain point, right? So I can't tell you to put 75-point stops in and trade the Nasdaq, because that's gambling. That's not trading. So while the volatility is like this and we're stuck in that flag, I think we say hands off. And let's go play with the metals and see if those flags pay off. All right, traders. That's what I wanted to show you. What side of the argument do you want to be on? Make sure whatever side you're on, you use stops. Always use stops. Come on down to livewithoscar.com. Keep yourself calm at all times. If you cannot, say this to yourselves every morning, every afternoon, every evening, over and over again. And you know what that is. Stops are in. Emotions are out. Traders, my apologies for those crappy couple of days getting tagged at the highs and lows in the ES and Nasdaq. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.